The CFTC released the COT report yesterday, and in this video we'll be looking through that report and seeing the new bias of the markets. Now, personally, I track the leverage fund traders because personally, these guys are the only people who tend to move their trades week by week and change constantly, just like you and I, who are traders who change constantly. This is because the leverage fund traders are the only ones who have a weekly report to give out to their investors. They are mostly contained of CTAs, that is certified trading advisors, and these guys, they have to report to their investors that they are either making profits or losing some money. That is why I personally prefer to track specifically the leveraged funds. Though there are other types and there are other people or other traders inside the CFTC's report, the COT report specifically states that the leveraged fund traders are the ones who actually handle other people's money in trading space. Hence, they are a bit speculative like you and I. Anyways, heading into this last week's data, we noticed a little bit of change. We noticed a little bit of change in some trades or in the total number of trades placed last week. As you can see, it is dated the 30th of June, and if you check on your calendar on your laptop, you'll notice that 30th of June was last week Tuesday. So as of right now, there's supposed to be a new report being collated that will be sent out by Friday if there is no holiday. Looking into the report, we have the Australian dollar. The Australian dollar, just by looking at the top here, we can see the current situation of the Australian dollar. It's basically more long trades than short trades. So it seems like they are beginning to accumulate long again at this point in time. But we'll notice it when we go into the history page. We'll know if it is beginning to accumulate or if that change is much more short term. We have the Bitcoin. Bitcoin is majorly short at this point. We have CAD, we have Swiss franc, we have Ethereum, Euro, British pound, Japanese yen, New Zealand dollar, and the US dollar. So basically, the leverage fund traders are heavily short a lot of currencies except the British pound and the Australian dollar as of the last set of trade. And we can see it right here. Now, it's not just if they are actually long or short currently, but it's also in the way they did it. So the way they did it tends to tell you what is really going on. Now we're looking at the leverage fund sentiment, and we're going to be looking at it like this. This is the total fund longs, this is the fund shorts, and this is their net positioning. The net positions tells you if they are actually more positive orders than negative orders. That's different. That is one-sided. The other side of the whole equation is the change in the amount of contracts, both on the long side and on the short side. Now, this tells you what's their actual aspect or their contract, their current status, their current plan really is all about. So let's look into it. If they are increasing short trades, the reason why I have the shorts as red, even though the dollar is positive, is because if they are increasing the amounts of orders in their short trades, then they are looking to go short over time. Now, looking at this, you can see that for the Australian dollar, they both removed long orders and they added more short orders, meaning that they are beginning to accumulate shorts. That is what it means. For the Bitcoin, for people who trade Bitcoin, I won't look through that. That's for CFTC, but that's for Bitcoin traders. What we see here is that they are beginning to accumulate long, as well as they are accumulating short also, but they are accumulating more longs than they are accumulating short trades. The Canadian dollar has a similar situation, right? The Canadian dollar is currently bearish, currently heavily bearish, but the total change, what we'll notice here is they added more long trades, but they added way more short trades. So in general, they are kind of feeling like it makes more sense to short the card than to actually buy the card, in their opinion, right? For the Switzerland economy, that's the Swiss franc, we notice that they added more longs and they reduced more shorts. So they are looking to slowly accumulate Swiss franc. So they're beginning to increase their stance on the Swiss franc. That's what it means. For Ethereum, this is another cryptocurrency, we notice that they reduced their long and they heavily reduced their shorts. So if you take a look at the longs and the short reduction, you will notice that they are tending to go more long. In this case, they have more long perspective. For the euro, they reduced their long position, but they also drastically reduced their short position, meaning there is a higher tendency that they would sell the euro compared to many other currencies in their bucket. Now, on the CFTC's report, you see that the euros against the British pound is a specific asset of its own, which when most people look at the euro against the British pound. So the euro against the British pound, most times we do it by comparing the euro and then comparing the British pound, which is not bad. It's not bad at all. But what the CFTC is showing us here that there is a side of the trading board that has euro British pound as a specific asset on its own, not just euro, not just British pound, but the euro against the British pound. And what you notice here is that last week it seems like even though they are net a little bit short, like their total contract stance is looking like it's short, they seem to have added more longs and they have reduced their shorts drastically. So they are beginning to accumulate, and in that kind of case, it means that they are beginning to see a zone or an area where they feel that the euro would surpass the pounds in terms of value. That is what it simply means. And looking way back from where price is, you can actually see that there actually is a small demand zone right here. However, if I was going to trade this market, even from the weekly time frame, the last thing I see here is a break of structure to the upside right here. So this is the clear BOS, the break of structure. And in that case, for me, I prefer to use things like an extreme demand. So this to me is the extreme demand, and to me, this zone kind of shows that they are slowing down, and possibly they might even take the turn here. They might take a turn here for a little run up, or they might go down in and buy in. But that is just speculation. What the trading market is basically all about, speculation. Now, if you look here, one thing you will notice is that the British pound is much currently a bullish market, or rather bullish stance in terms of the amount of orders when you look at the leverage funds to the leverage shorts. So it's more like a ratio of how much long and how much shorts they have. The net positioning is obviously is going to be bullish for it to be bullish in the first place, right? But this is what you need to pay attention to, right? What you need to pay attention to is this. They drastically reduced their long trades. However, they had way more reduction of their short trades. If you look at the mentality of what they are trying to do in the euro, they are overall bearishly heading. They are heading bearish in the euro. And if you look at the overall stance of the pounds, they are heading positive. So it doesn't relate to this euro British pound stance you see here. I'm just trying to make that quite clear and obvious to you. Then we have the Japanese yen. The Japanese yen currently stands at 30%, which is heavily bearish, clearly bearish, right? But take a good look at the number of leverage position in the total, like the net positioning is heavily bearish. But what's the current direction? How did they take that stance? What was the move they made to achieve that stance? Well, they reduced the amount of long they had compared to the previous week, but they drastically added more shots. What you need to understand now is that if they are adding shots, they are saying that they believe in more downside, and if they are adding longs, they believe in more upside. What you've noticed here is the rate at which they are reducing longs. It's telling you that they are not all that short in this currency yet, but they are not looking at this currency moving for, should I say, beyond where it currently is much. So if you take a look at what's happening here, the Japanese yen, they reduced their long, meaning first and foremost, they don't believe it's going to go up much, but they started increasing their short. So they believe that this currency is going to find major weakness. That's what's happening. It's not when they say they increase their short, they are placing more short trades. And for you to place more short trades, it is more like selling, right? For you to be selling that particular currency that much, that hard, that much, it means you believe it's going to be going down soon. So it's going down compared to other currency. That's another ballgame, right? Now for the New Zealand against New Zealand dollar, the loss situation here is drastic. It's surprising to even me. Heavily bearish. The current stance, right, is heavily bearish. Looking at the data, we notice that the net leverage. If you look at it, it's not about the number of net leverage. Take a good look at the Japanese yen. It has much more net shorts, like negative net position compared to the New Zealand. But the New Zealand is far more bearish. Why? The comparison is not how much they have here. The comparison is how much long against the amount of shorts they have in total. How much long makes up the situation. So you can see this when you add these two together and you divide this by the sum of these two, you will get a 19% stance, meaning there are 19% of the total order or total position of this leverage market is long. So therefore, if 19% of the total order is long, then they actually short the market. If it's less than 50%, they are short. If it's more than 50%, they are long. So at this point, what happened? How did they achieve this current stance? Well, what they did was they reduced their long contracts and they also increased their short contracts. There are more people or more contracts looking at the short side of the New Zealand dollar than it is on the long side, right? The US dollar is a very fantastic market, currently still strongly neutral, almost about to enter the bearish zone, literally about to enter the bearish zone. But what's happening? Well, the total net leverage positioning is obviously bearish, more short trades than long trades. But how did they achieve it? Well, they drastically they reduced their long orders. However, they also reduced their short order. Now, this is where you need to understand that dynamic of the change. They still reduced short orders and they reduced long orders more than they reduced their short orders. So they are looking more at a neutral situation rather than short the currency or long the currency. It's more like they feel this is heading towards neutrality for now. And then after the neutrality comes the next decision, either to go hard or go slow. Now, then let's take a look at the retail sentiment. Well, the retail sentiment, most times people say the retail traders are always opposites. And it's not really true. It's not really true. The retail traders are mostly opposite of the institutional traders, which is the asset managers. However, most times or sometimes they are in tune with the market. I mean, take a good look at this. They are actually net positive on the Australian dollar, meaning they are looking to go long. They are actually net negative on the Bitcoin, net negative on CAD, net negative on Swiss franc. They are quite neutral on Ethereum. This is the place where they have like the other side of the market, the euro. They're actually long the euro when the leverage fund is short. They are long the British pound, euro against the British pound when the situation is short. And you can see right here, you saw that short actually coming in to this market. You saw it right there. So then they are short the British pound when the British pound is actually gaining strength. So this is where you see things like the British pound against the dollar. Where is it? So people who are trying to short this currency right here, it looks like a good place to short. Honestly, it's showing every signs of reasons to go short in this currency. However, for some reason, shorting this currency right now feels like it's going to be a big mistake. Again, shorting the currency means you are selling the British pound, you are buying the dollar, right? It's going to be a huge mistake. I mean, the dashboard shows that. I'll show you on the dashboard later in time. The Japanese yen, you can see that they're actually flip side. They're quite neutral, but the market is actually the big traders or the leverage funds, they actually short the currency. They're having similar perspective on the New Zealand dollar, and then they have opposing behavior or perspective on the US dollar. Now, we've understood up to the point of every single currency what is happening in terms of the leverage fund. Now, let's take a good look at a little bit of the history, right? A little bit of the history is what tells us what really is the trend of these traders. What is the trend of the traders one after the other? Because that trend is what tells you this is what they are currently doing and this is what they've been doing, and this looks like what they are kind of hinting at, right? So over here we have the asset managers, the leverage funds, and the retail sentiments. Just read the color codes at the top. The light blue is for the leverage funds, The asset managers, which is the big institutions, not the banks. The banks are not institutions. The banks are other reportables, and they are not under assets or institutions, right? The assets managers, the institutional managers, and then against the leverage fund, and then the retail sentiment. So this is the situation for the Australian dollar. You can see that the leverage fund, the asset managers have heavily switched position over a short period of time, all the way from being long way back in May, and now in June, July, they have dived heavily into the negative position. However, the asset managers are slowly, you can see that their movement is far more slower, so they are slowly beginning to tilt downwards, while the retail traders seems to be going heavy on this market. Moving on, we have the Canadian dollar, and the situation of the Canadian dollar is quite similar, right? It's just a little bit similar, but this time the leverage fund have always been bearish. Then we have the Swiss franc, right? The Swiss franc. We can see that the Swiss franc has been average by a long shot. It's been in the bearish camp for a while now. Even the retail sentiment have figured this out, and they've decided to sit with the entire market. So the entire market is actually short on the Swiss franc stance. So if you're trading against the Swiss franc, I think you would already know what it looks like against the Swiss franc, right? You see that market is running up. Oh, sorry, I'm in the 1 hour. So you see that this market has been properly to the upside, prompting to the upside a lot more. If you be trading the card all the way from May 1st has been very should I say abysmal against the US dollar. It's just never found strength at all. That's just the way it is. Now for the euro, we have the euro, and this is quite tricky, right? This is where the trick actually begins. You can see how net long the asset managers has been on the euro. Matter of fact, the asset managers, they've been long since 2025. That's the first thing you need to understand. This data starts from January 2025. They've never dropped below long stands, bearish, bullish stand. But they slowly started to trend downwards lately, ever since February 2026. The real trend you see here is to the downside. For the retail sentiments, similar, they started dropping since that same time. You can see that the retail sentiment is quite aligned with the asset managers, right? But what is the leverage fund doing? The guys who are changing trades and trying to prove that they are real traders, and they are actually the main traders of the market, they've flipped short on this particular market. So I expect the euro not to have as much strength as it normally does. I mean, if you take a good look at the euro chart, I'm just going to put everything here in. Take a good look at these two currencies. Take a very good look at these two currencies. You notice how the dollar gains better, like it gained strongly against the British pound, but didn't gain so much against the euro. As much as the euro was flat, the British pound seemed to have been fluctuating even faster. Now we're going to be looking at the British pound to see what was happening. So generally, right, we're currently sinking on this ship, and because we're sinking on this ship, what do I expect? I kind of expect falling situations. But you notice how much more stiff this is compared to this. It's quite stiff. Now let's see what is happening in the British pound economy. Before we go to the euro against the British pound, let's just check out what's going on in the British pound. Now you can see that they are long the British pound. Even though the asset managers are short this market, the retail traders are short the market. The asset managers, yes, they've been slowly dipping to the downside, but they are actually long on this market for now, as of last week. Take note, if they are long the British pound, it means this chart is supposed to be going up. Compared to this, you see that they were also long, but they were not as long as they used to be. You can see it right here. The difference is what you're seeing right here. Run up and a slow grind upwards. That's how you look at it. Now, I'm not saying that they are the only reason why the market is moving, but you can see the effect on the chart for yourself. Now, let's check out the euro against the British pound. What we see here is this is a market where the asset managers has been heavily on the euro side of this market, the same way they kind of loved the euro so much, right? But we can see that the leverage managers, or rather leverage traders, have slowly eked upwards, slowly eked upwards, slowly eked upwards. Now they've left the bearish camp entirely. So I kind of see this market looking like a market that's, like I just showed you before, it's a market that's most likely about to hit a low before it starts to suddenly gain to the upside. This is what it just looks like. We're about to hit a low, and then we may start seeing major moves to the upside anytime soon. Here it could be here, it could be here or here. So we may start meeting that move to the upside. And mind you, this is one of the best markets to trade mean reversions. Any mean reversion strategy you know of. I mean, take a look at this strategy on the weekly time frame, this market on the weekly time frame. You see how it tends to play within this large range. But this is what I used to explain, right? When I say something might be volatile but not consolidating, something might be consolidating and not volatile. So this is it. You can see this market has like some very volatile situations. You can see this move up here, this strong move up here, this strong move down here, move down here. It has very good volatility sometimes. It's not all the time, right? Sometimes. You can also see it even here on here. See, just this is 1 week, this is another week, this is few weeks. There's a lot of movement. Recently, it's been slow compared to itself, but we're beginning to see another situation of something like this again. So it's beginning to print. I expect it to continue for like a week or two before it sees those tiny pullbacks and probably another continuation of a pullback to then move upwards. But regardless of all of that, what I'm saying is basically this market is a market that has good volatility from time to time, but it's consolidatory at the same time. So we have the Japanese yen, where we see only the retail traders seems to be heading towards the bullish side. Everybody is now heavily bearish the Japanese yen, meaning that we would most likely see this grind to the upside continue. This slow grind to the upside, even though the market is now fighting against the BOJ, hard against the BOJ at 161. We may continue to see this grind to the upside slowly until the BOJ finally either caves in and allow it to have a clean run or suppress it again one more time. Moving on, we have the New Zealand dollar, which shows a trend of everything is on the floor. You can see the asset managers, the leverage managers, and the retail traders all have had a bearish trend since February of this year. And last but not least, we have the US dollar. This is the currency that has most of the fluctuations, right? The asset managers at some points went parabolically bearish on this market right here. This was way back in February. But right now, the asset managers have come to realize that Donald Trump's tenure is not going to really kill their assets, so therefore they are holding on to it. For the retail traders, they are standing firm too, hoping that run also helped them, which, quite frankly, it is. The only people that seem to be opposing this situation is the leverage funds, who are actually bearish on this market. So they seem to want to buy the market when it's at high and sell. I don't know why. Or they are buying the markets. They are shorting the market for a funny reason. They might be shorting because they expect a short-term push to the downside. Those are different reasons the leverage funds may be shorting the market for. So they expect a short-term push to the downside before another run-up begins. And from what I'm seeing here, this is basically technically and just basic technical analysis. We have a break of structure to the upside. This is a break of structure to the upside. This is a support zone right here. A very good support zone standing right here. However, I think I'll put this as a proper support zone. And then, however, we actually have a daily zone down here. Now, this doesn't mean price is going to come down to take this low, right? It doesn't mean at all. It doesn't mean that stuff at all. I mean, take a look at this. This is still here since when? May 11th, and nothing has happened. The market keeps running. So this market, sometimes it forgets demand zones, but not all the time. You see, it took so long for the February demand zone to be met. See, back in February 2027, back in the February 26th, up until April 14th, before price came back into those zones to mitigate and move with, right? So if you look at this whole situation, we have another break of structure up here. So long-term break of structure right here, short-term break of structure right here, and we have short-term demand zone on the daily and long-term demand zone on the daily. So we may see this come down to these levels before it move up. I'm not saying it's surely gonna happen. There's a may situation, maybe. Or we may see the market, bounce off the support zone and continue for a while before it finally does the dip and possibly find strength here or find strength here. So this is all for the COT reports. Now, how does this COT report collect itself into the market? Well, just in case you've forgotten, there are three things we look at in the market. We look at fundamental analysis, we look at sentiment analysis, which is basically the COT reports. So fundamental analysis is there. Then we have sentiment, which has to do with the COT report, which we just read. And then we now have the technical analysis, which is the one we do on the charts. But we also have like technical situation, more like technical sentiment. So this is gauging the current technical direction of the markets by using simple moving averages. What is the average move on this market right now? So looking at all of this, you can see that there are some markets that are actually showing so many grains. There are some that are showing mixed color, and there are some that are heavily negative. Just for example, like the New Zealand dollar having severe negations right now. I had to close the trade I had on the New Zealand dollar against the US dollar because of this situation. It was a buy trade. I was kind of rolling a little bit in profit, and then the whole market collapsed on me. Said, hey, do not take any further move. I had to close the trade not because of the technical setup, but because of the fact that I'm looking at the fundamentals, and I know for a fact what can happen when you try to play against the fundamental aspect of the market. You will not like yourself. Trust me, you will not like yourself when the fundamental starts to hit you and hits you fast. I had to close the trade right here. It just moved in a very one-to-one ratio profit, but I was hoping for something around 3. It could still end up going to my take profit, but better safe than sorry, right? That's how you do in this trading space. You save your capital and save yourself the stress of going through hell. So this is it for the COT reports, and catch you all in the next video or in the next live where we talk about the current stance of the markets and basic analysis with the whole thing. Peace.